Good morning or afternoon, depending on where you're located. Welcome to the Business and Legal webinar in the IGDA's Wednesday webinar series. My name is Tom Buscalia. I'm the game attorney, and I'm also chairman of the board of directors of the IGDA. I have the pleasure of welcoming, I'm also the wrangler, or what we call the topical nanny for the business and legal sessions. And this month, we're very fortunate to have Cedar Boschan, who is a forensic auditor who does royalty audits. And I was talking to several people, and they didn't know what they thought I was talking about the IRS when I said audit. And as somebody who's done a lot of contracts over a lot of years, audits are something that developers ought to understand, and I thought that Cedar would be just the perfect person to present it. So I'm going to be Q&Aing with her a little bit later, but for now, I'm going to turn this over to Cedar. Take it away, Cedar.
Great. Thank you so much for having me this morning, Tom. This webinar is being recorded. I think that I'm not able to hear you, so if you have a question, type it into your interface here in the webinar. And as Tom mentioned, we're talking about video game audits today, what you need to know. We're going to talk about why developers are underpaid and what the benefits are to potentially auditing. And we're also going to talk about mechanically, how do you audit your publisher? My name, as Tom mentioned, is Cedar Boschan, and I do royalty and licensing audits. I also do litigation support, and the difference between those two things is that with a royalty audit, most of the time we go in and audit a publisher pursuant to contractual rights, and we're very professional and respectful of your business relationship with the publisher. And we go in to identify information and uncover amounts due you as developers. And then we try to resolve that audit amicably with your legal counsel. And then with respect to litigation support, either if we aren't able to settle the audit in a friendly manner, or if no audit has been conducted, but there's some type of a dispute whereby you've been damaged by a publisher, then we would come in and quantify damages and serve as an expert witness doing litigation support. But today we're mainly going to focus on the royalty and licensing audits. And for those of you who are on Twitter, my handle is royalty expert, but I'd like you to, if you're going to be tweeting live, please use the Wednesday webinar hashtag that the IGDA uses. And that way people can follow along on Twitter. So Tom, you're welcome to get started with your questions.
I suppose I should turn on my microphone. All right. Well, I think the first thing is it would probably be good for you to explain to the attendees exactly what an audit is, because these things, I guess let's get down to very, very simplistic things. When I was talking to Chris Crowell, who about your presentation, and he does the game design webinars, he had no idea what an audit was. And I think a lot of, especially with the advent of smaller studios, I think as far as I know, aside from the Amazon contract, every single distribution or publishing deal has audit provisions in it. But I don't think many people understand exactly what it is that you would be auditing and the sorts of things you would be looking for in an audit. So it's probably a good place to start, give them an idea of exactly what we're talking about.
So an audit, the kinds of audits that I do, we call them royalty and licensing audits, because instead of auditing on behalf of the IRS or auditing a public company for shareholders, what we're doing is we're auditing developers' contracts with publishers and distributors. So what we want to do is ascertain what contractual provisions your business partners did or did not comply with. And if your business partner, being presumably a publisher or a first-party distributor, if your business partner did not comply with a particular provision, then we're going to quantify or attempt to quantify the amount that is due you as a result of that noncompliance. And so when we go into audit, which, as Tom mentioned, is usually pursuant to a contractual audit, right, that's in your development agreement, we are going to ask for a lot of documents in order to ascertain whether the publisher complied. So examples of those would be sales reports, different kinds of financial reports from the financial system, but also really granular documentation like invoice copies and documentation of expenses that your royalties are based on gross. And sometimes we actually are interviewing different people, either in marketing or engineers, to help so that we can understand, for example, whether your IP was used in any other games and things like that. So hopefully that answers your question. I think we're going to dig a little deeper into some of the kinds of claims that an audit may disclose, meaning some of the kinds of issues that we disclose. Actually, I have some slides that can help do that. I mean, there are many reasons to do an audit, but one of the main reasons is to identify unpaid amounts. And so basically, developers, if you are wondering if you've been paid your fair share, the answer is if you've received an advance and you're nowhere near recouping that advance and you've received the correct advance amount, you probably have gotten your fair share. But if you're nearing recoupment or you have recouped, there's a good shot that you haven't received your fair share. And so I'm going to talk about some of the factors that erode your developer shares. And these actually result in specific audit claims. So you'll get an idea of the kinds of issues that an audit discloses to developers. So some of the factors that erode developer shares are dishonored development or distribution agreements, overcharges to your account or in the computation of net receipts, underreported revenue, and we'll talk about this in more detail, but actually your personality can affect what you ultimately collect from a publisher or a distributor.
Yeah, I've got to agree with that. One of the things that I've noticed with developers, and I think we probably ought to explain a little bit about this, the fact that these, the audit provisions basically apply to any time when you're sharing revenue from your game. If it's a work-for-hire deal and you just did it for a specific price for a third party, there wouldn't be anything like this. But when there's a revenue share, there are almost always provisions in the contract that allow you to basically check and make sure that you're getting paid appropriately. And for those of you who haven't done a publisher deal or are a little unsure about what the recoupment issue that Cedar was talking about, that's if you're given advances against revenue, then you generally have to pay those back to the publisher or the person who funded the game before you start participating in the revenue.
Exactly right.
Yeah, I think some of the elements. What are the elements that you've seen? I've seen some pretty weird stuff, but what are the elements that you've seen that impact? Where you find shortfalls in payment? Is it just them failing to report revenue? Is it failing to calculate the net revenue? Since the royalties are usually or almost always, except for digital distribution agreements, paid on net revenue. Have you found issues? Do you see issues with the determination of net revenue?
Yeah.
Where are the usual? I mean, aside from just not paying at all, which
right.
Exactly time to time. Yeah, probably the easy case. But what are the sort of sneaky things that? And I don't think it's a good idea to imbue or suggest that there's any bad intent here. But what are some of the issues that you've seen that were sort of not as obvious as just not paying?
Right. I think it's really, even if there is bad intent, it can be hard to show that. And I think in general, what happens at these big companies is, there are very smart people there, and they hire people whose job it is to minimize the expenses that they're paying out. And so there are a lot of people with the goal of minimizing what they're paying out to developers, especially if you're talking about a small publisher with cash flow issues. So it's not always dishonest. It may be that regardless of the reason, whether it's a genuine mistake or deliberate, I'll give you some really specific examples. So one example of how developers end up getting underreported to is incorrect allocations of revenue and or costs. And I'll give you an example of that. If in your development agreement you're entitled to a share of net receipts, and that net receipts calculation includes deductions for marketing development fund, one of the things that I've seen at major publishers is the reporting of your net receipts has a deduction for a marketing development fund, but it doesn't mean that any of those marketing funds were spent to market your titles. It can be an automatic allocation whereby the financial system allocates marketing expenditures to various royalty payees based on earnings instead of based on what the marketing was actually for. And so there are all kinds of allocations that a publisher may be making in determining, or really it's estimating, the revenue or the net receipts that it reports to you. And so incorrect allocations can be a big issue, because if we delve into those allocations and we find, well, actually the marketing expenditures for which you were charged were for other titles, then we're going to calculate an incorrect deduction amount. As another example, if the sales of a particular, well, actually, let's say a publisher sublicenses a game or rights to a game to a third party and receives a flat license fee for that license. The publisher may do what's called a straight line allocation of the revenue it collects across all different titles. But probably if you're a developer that's in a position to be doing an audit, you've had a successful game, and it may be that a greater share of the revenues are attributable to your game than to other games. And so that's one of the things that we look at in an audit, whether the allocations have been fair and reasonable. Another example of a specific kind of an audit finding that costs clients money is late payments. I've had developers have a really hard time collecting. In fact, I'm completing an audit right now where the developer still hasn't gotten one of its milestone payments from years ago. It's just $20,000, but I don't really understand why. In this case, maybe the publisher had cash flow problems, but late payments can add up. I mean, you could be using that money for your business, and so there's an argument that you should be getting interest on those late payments, which is something that we can quantify in an audit. Another example.
I think the argument that the publisher needed the money more than the developer, I think I've heard that a few too many times. That doesn't mean anything.
No, they shouldn't. I mean, your contract has specific dates that you're supposed to be paid, and so.
Have you seen this? I actually, this happened to the guys at Epic in one of their first games, at least according to Mark Rain, and they had negotiated very aggressively to get to basically pare down the deductions from gross revenue to determine net to the very minimum amount that the publisher would agree to. And they've gone a long way to do this. And then apparently what had happened is because the people in the accounting office don't read the contracts, they don't know what's in these contracts, right? They were processing the revenue based on their standard deduction model, which probably had some of the things that you were talking about already in it. And they did an audit, and we were just basically talking about why every developer who can afford to doesn't do an audit on every game as a matter of course, right? Because it's a contractual right, and there seemed to be we'll talk about this later about the whole I don't want to make trouble sort of mentality.
Right.
But they found that they had been using a wrong model to determine net revenue, and it amounted to several $100,000. And they were only like to their second or third payment.
Right.
So it can be a real deal, and it doesn't necessarily mean anybody's trying to cheat you. It's just a matter of, you know, what bothers me about that is obviously that it wasn't me, but some lawyer worked really hard to get them the best deal they possibly could, and then they ended up not getting it.
Right. I mean, I think one of the reasons why a lot of these accountings are incorrect is because of lack of collaboration between the finance people and the attorneys on both sides. I mean, I definitely think that for developers, if your attorneys collaborate with your accountants, you can make those accounting provisions especially tight and practical. And I think one thing to keep in mind as an attorney when, you know, you're doing a negotiation with a publisher is, okay, the publisher might be willing to agree to X, but can they actually do X? And so I think it's important for the attorneys on the other side to confer with their clients' finance teams to find out what their royalty system is capable of doing and whether they can even keep that promise, because it doesn't mean very much if they agree to something but they can't actually follow through on it. So
we've got a question from Andrew Greenberg that's sort of
sure.
it's a little off track, but I think it's in this topic. So Andrew was saying one of the problems that they've had in the past was unreported SKUs, and this is where I think what he goes on to explain that he's talking about if there's international SKUs, if you're releasing a game in multiple countries, each one would be treated as a separate release, and somehow these got lost in the process, possibly between multiple corporate entities, I guess. Do you run into that very often?
Oh, yes. And we'll talk about, I think we'll talk about that in a little bit.
Okay.
But I will say, you would be amazed. Some major companies out there do not have major royalty systems. They have people computing your royalties in Excel. And it's a very manual process. I have a lot of experience in the music industry. The music industry has had decades to evolve royalty systems, and so they actually have a mechanism in most major record companies whereby if a sale of a particular product doesn't find a match in a royalty system, it's recorded in a suspense file somewhere so that it can eventually be matched to a product in the royalty system. There is no such thing at many major game publishers. So it's kind of up to us as auditors not just to go through their liability files to identify this stuff, but to actually do a lot of research and get complete product lists and match that against what's been reported in order to make sure that we've identified all of the products that should have been reported. But we'll talk about revenues in a minute. So let me just run through some of these examples of dishonored agreements. I've had a client where basically the deal with the publisher was that the first platform through which the game was released would have a higher royalty rate than the subsequent platforms. And leading up to the negotiation, there was a lot of verbal discussion and even emails going back and forth that assured the client which platform would be the first to release. And it turns out that also the actual agreement didn't specify the platform. It just said the first platform that would be released. But the publisher switched the platforms and it instead released a platform first that didn't have a lot of sales. So my client felt misled about those incorrect royalty rates, and that became an audit issue. So, I mean, make sure that your understanding of what your agreement is reflected in your actual contract would be my takeaway from that. But another example of audit findings due to dishonored agreements would be Unmet marketing commitments. I mean, a lot of times the publisher will agree to spend a certain amount of funds in marketing your product, and they don't always do that. And that can cost you sales and royalties. So I think it's in brand equity, actually. So I think it's important. So let's move on to another category of audit findings, which are overcharges. So
on that last one, I just want to point out one because we had this. I've actually had this situation and dealt with it, and I think it has to do with underreporting. We had a situation where we hadn't fought really hard to get escalating royalties, so that there were certain breakpoints. After 200,000 units, the percentage went from 25 to 35, and then ultimately up to 40%. And what our publisher had done is they had basically obtained a guarantee from an Eastern European publisher. So they basically got a single payment of several $100,000. And their position was that, well, those sales haven't yet occurred because this is an advance against sales. And the contract specifically stated upon receipt of funds. So
right.
The only issue was allocating how many units that represented, and we came up with what we said was the appropriate amount. And they, you know, I mean, this is one of the most difficult people I've ever dealt with. We had to send them breach notices every quarter. But ultimately, we were able to get them to see the correct way to account it, and it accelerated. You know, it pushed us from a 25% royalty rate to a 40% royalty rate. So it was
wow.
really important. It meant a lot of money to the company. But I think when you do something in a contract that's anything other than the one they sent you, you have to make sure that you follow up. It's that same issue. But
right.
I thought that sort of fit in with the underreporting issues.
Sure.
Yeah.
So overcharges, there are lots of examples of overcharges. I'm going to talk about a few of them. But one of the tricky things about auditing overcharges is that a lot of the charges, not all of them, but a lot of them happen early on in the game production process. And so by the time you decide it makes sense to do an audit, there can often be an issue as to whether we're able to audit all of those charges. But in any event, some examples of audit findings related to, and by overcharges, what I mean is if your royalty is based on anything other than gross receipts, if the publisher is allowed to deduct anything from that, I'm considering whatever they're deducting in a charge, and we look at whether that's been calculated properly. And so one example of a type of an overcharge that I've seen is where a developer may receive development aids. And usually what the contract says, or at least in the case that I'm thinking of, what the contract said was that upon return of the development aids, the book value of those development aids would be credited back to the developer. And the developer did return the development aids, but the publisher didn't make any adjustments to the statements. It just charged the full original value of those development aids to the developer, even though the developer didn't keep them. Another example of a type of charge that's really, it's really an offset to the actual charge that should be credited to developers, are manufacturing rebates. Because if you have a hit game on a console where there are physical discs that need to be manufactured, a lot of times the console manufacturer who's manufacturing those discs will give the publisher a rebate on the manufacturing costs for having such a big hit. And so the manufacturing costs, if any, were deducted from your net receipts that were reported to you. Those manufacturing costs may be overstated if the publisher hasn't credited the rebates it received.
How is this manufacturing rebate triggered? Is it by a certain number of unit sales usually?
Yes.
Okay.
Yes. Another example of audit findings related to overcharges are, this amazes me sometimes. I did an audit where the publisher was deducting warehouse costs and royalties like Nintendo. And when I went in and I tried to audit the actual costs, it turned out that the costs that were being deducted from the reported net receipts were not just estimated, but they were rough estimates from over 5 years prior. And so they were just very different from the actual costs. And it turned out in the publisher's favor. So basically, my client was being overcharged for all kinds of costs that somebody estimated 5 years ago that didn't apply at all to his game. So that's a really common thing, actually, is that our clients are being charged estimated costs. In fact, on another more recent audit, when I got the details supporting the costs that had been charged to my client, it turned out that the accounting team was at the publisher, when it didn't have the accurate information available to it, well, I suppose when it wasn't available, I don't know the reason why they did this, but basically it would just copy the costs from the prior period and deduct those for the current period.
You mean they just make stuff up?
Yeah, they just copied the same costs from the prior period, and that's what they deducted.
Maybe it's not funny, but it sure seems funny to me.
I was amazed. I mean, I thought that was very sloppy. But anyway, another issue that has come up is excess reserves and allowances. And so let me explain what reserves are. So if you are a publisher, especially if you're selling physical products, you may anticipate that there will be returns that you'll have to receive and process. So instead of reporting to the developers all of your net sales, it's prudent to hold back a few of those net sales because you know some of them are going to be returned. And so there's a generally accepted principle of holding some reserves against returns. And similarly, publishers may hold allowances for price protection. And so what price protection is basically they want to assure their customers that if Walmart buys a game at a particular price and then the publisher discounts that game a few weeks later, they want to assure Walmart that Walmart will get the benefit of that price reduction. And so as a result, they will give like a retroactive credit to a lot of customers for what's called price protection. And publishers anticipate doing that, so they may have hold an allowance for the fact that they're going to have to give some price protection credits to customers. So it's fine that they do that, but eventually, once the sales have played out and all the returns have come in, they need to liquidate those reserves and they need to liquidate those allowances to the extent that they haven't actually been used. And that doesn't always happen. I actually had a client recently where I could see on the front of the statement that the reserves had never been liquidated, even though these games were basically at the end of their life, but they were basically obsolete at this point. So it added up to hundreds of thousands of dollars to my client that I could tell from the front of the statement. So that's another
sort of thing. Oh, just a second.
Go ahead.
No, is this the sort of thing that a lot of developers just don't even catch because that they're all on to the next game and they're not necessarily looking at revenue from a game that peaked 2 or 3 years ago?
I don't know if that's why. I think, in this case, the developer. I'm sorry. Did you ask? Did the publisher doesn't catch or the game?
No, that the developer doesn't even look at it after a while.
I think
once the revenue stream is not as strong as it was, they're maybe not tending to their knitting, so to speak.
Well, that would be giving them the benefit of the doubt. I think a lot of times they are aware of it. In fact, we alerted this particular publisher to the issue, and it took over a year for them to pay on it. So they knew about it for over a year, at least since we told them.
No, I meant on the developer side that they just that publishers developed this sort of lackadaisical attitude toward trailing revenue that may be owed the developer because developers often don't ask for it.
That might be what's happening. I think that developers, and we'll talk about this in a few minutes, I think developers have a lot of trust that the people they're dealing with, because they're dealing with nice people at the publisher, are good people that they can trust, and I don't think that they ever expect the I don't know, the specter of how they've been unreported to, they're always surprised. And even if it's on the front of the statement, I mean, I know developers are very smart, but it's just, this is a very niche kind of an expertise, and I don't think developers can be expected to identify things like this. And I might be oversimplifying it a little bit, even though I could tell from the front of the statements that there was an issue here. I actually needed more detail to calculate it exactly right. So, so anyway, it's just, I'm not really sure why it goes undetected, but I guess that's why I have a job.
Yeah.
So underreported revenue is something we started to talk about with a question from an attendee of this webinar. And one, I think we talked about just completely unreported products. Another thing to look out for, especially if your game has come out on a new version of a console platform. I mean, basically when the console manufacturers update their platforms, they want to have exclusive content, and so they're paying exclusivity fees to the publishers in order to get exclusive terms on games. And so, and actually it doesn't just extend to the first party distributors, but also even certain companies like NVIDIA and stuff, they pay for some exclusivity. So what happens is publishers get these exclusivity fees, and so far I've never seen one of those fees reported as part of the receipt on a statement to a developer. So usually until we go into audit, you aren't going to get any share of that exclusivity fee, even though it's for your game. Another issue, and this goes back to the allocation issue I was talking about before, but bundles. Bundles are pretty popular, both physical and digital bundles. And so we have to look and ask ourselves whether it's fair, whether you're getting your fair share, basically, or whether the publisher conveniently allocated most of the revenue to a product on which they have to pay no royalties. Another issue that comes up in audits more and more is self-dealing. And I'll give you an example. I had a developer client where I audited a major publisher, and his royalty was 5% of a receipts number. And what I found when I did the audit is that the company I was auditing licensed the game to its sister company for a 5% royalty. And so the company I was auditing was reporting only 5% of the receipts to my client. So my client was getting 5% of 5% instead of 5% of 100%. And
were these former record industry executives or what? Wasn't this was the model in the 50s and 60s, wasn't it? There'd be a publishing company and then there'd be a distribution company, and the same guy would own both. And unfortunately, the publishing company wasn't doing very well, but the distributing company was making a fortune.
Right.
That is where this model comes from, isn't it?
I mean, a lot in the video game industry is modeled off of the music industry. I think that's why I've found it easy to focus on both music and video games. But I'm not sure exactly where this comes from, but it is common in the music industry as well, where there are affiliated entities, and then they try to make deals with each other so that they can take a chunk of money off the top that they don't have to report to their, in the case of record companies, reporting artists, or in the case of publishers, usually it's the developer or another property licensor. So
what about ancillary revenue from licensing of an IP where there's either an IP assignment or, regardless of whether there's an IP assignment or not, revenue from licensing the IP for everything from tchotchkes and T-shirts to movie rights. Do those royalties, or does that revenue get missing sometimes, or is that generally within the model of standard reporting?
So it really depends on, first of all, what the contract says in terms of whether the client is able to collect royalties on the merchandise. If they own the property, then usually they do get a share of that merchandise. And so we do have audit findings related to merchandise from time to time, a lot. But in other cases, my client is somebody who's literally developing the game, but maybe for a pre-existing property, and so they aren't entitled to share in the merchandise revenue. So it doesn't always come up, and actually it's one of the reasons why I didn't focus on it here. But it's an issue just like any other type of revenue issue. It goes unreported, and it also depends on the structure, like whether the company has a third-party deal and the third-party sub-licensee is doing all of the distribution. That actually is easier because then the publisher is just getting statements, and it's pretty easy to see if they've been included or not and to audit that. But on the other hand, if the publisher itself is in the business of distributing products that include the brand of the game, you can't just look at a statement. You have to include that in the scope of all the other audit procedures. And if the sister company is doing that distribution, then it expands the scope of the audit and the expense of the audit. So we talked about self-dealing, and I was going to say, really, whether we're going to be able to make a claim on that, if it's an issue, has to do with what the contract says. Definitely the contracts have become more sophisticated in preventing us from making that claim. So it's something that you want to work with your attorney, like Tom, up front to make sure that there's language that will protect you so that you are entitled to get what we might call at-source accounting based on the source of the revenue instead of what an affiliate reports to the company that you're making a contract with. Because all of these big game companies have many affiliates. So let's move on to incorrect conversion rates just briefly. We see different things in the incorrect conversion rate. For example, some companies just use an estimated conversion rate, and they have the actual conversion rate. They have complicated hedging practices, and so we have to look to what the contract says to see what the conversion rate is supposed to be. It's usually supposed to be the actual rate of exchange. And then there are also foreign tax withholding issues. So basically, a foreign affiliate may withhold tax from payments to the United States if you have a deal with a publisher in the United States. And usually you're getting a lower conversion rate, or there's some other way that they're withholding a share of that tax from you. And again, we have to look at your agreement to see whether that's proper. Even if it is proper, you should be able to claim credit for that in the United States. So we at least try to get you documentation so that you can do that. It's kind of complicated. I don't know how much more time we have, but I should probably move on from there. But if anybody has any questions.
I don't think we have that much time, Cedar, because I know how complicated the whole thing is wrapped around VAT taxes and EU tax issues. And it is something that I think can be significant. And also, usually, at least in the contracts I've been reviewing recently, there's usually an obligation for the distributor or publisher to use their best efforts to minimize the tax if they're obliged to withhold it. And
right.
then there's the ancillary issue there with, if they're successful, do they actually credit the developer with what they don't pay, or is
right.
this going to a fund that just sort of disappears? Which I'm
right.
sure that
they don't
where
credit.
you come in, isn't it?
Yeah, exactly. So let's talk a minute about, I hope what I'm saying about this isn't too controversial, but I do think that the personality themes I've seen in my developer clients are one of the reasons why they are in a position where they get taken advantage of, basically. And I'll contrast this with the record industry. So my clients in the record industry have a team of advisors. They have attorneys, they have business managers who are accountants. And so they are protected by a team of experts who are fighting for them. And I definitely see amongst my game developer clientele, there isn't that team of advisors that is protecting you guys in most cases. I find that developers I meet are pretty trusting of the people that they're dealing with. Actually, they don't want to create a lot of conflict. I think that a lot of developers are afraid of creating too big of a conflict because they want to get more work from the developer that we would be auditing. And also, developers tend to be very independent. And one of the things that has happened repeatedly is the developer comes to me in a mess where they know that they're being underreported to and they want to do an audit. And I go in and I look at what the contract says in the accounting, and the contract is awful. And the reason why is because, you know, they are very smart and they felt like they could negotiate their own contract. And basically by not hiring an attorney up front, somebody like Tom, what happens is they don't get a good audit right. There aren't a lot of protections built in, or there's ambiguous language. I mean, I'm working right now on a litigation matter where the jurisdiction names two different places in the same contract, and the audit right is just so minimal that it's worthless practically. And so I think that developers tend to be very independent, but I think in the end that costs developers money. I think that developers are best advised to seek counsel and build a team around them up front so that they can have the best contracts. And also, I think that it gives you an opportunity to let your attorney and or your accountant be the bad guy, so you can be the good guy. And I think that's important to a lot of developers. You want to have a good relationship with your publisher, and so I think it's really important to engage counsel early on, and then again later on to take a look at whether an audit makes sense. Hey Tom, how much time do we have?
I'm confused. I'm showing that it's quarter till, but the timer on the thing says we've been on for 57 minutes. I think the timer on the monitor for GoToMeeting counts from when the admins logged on as opposed to when we launched. So we've got some time left.
We have about 15 minutes.
I got some questions too that go right to this one.
Sure.
And that is, you know, obviously I spend a lot of time dealing with this sort of stuff. It always bothers me when they come in later. I think one of the things I often tell my clients is that you really want, there's a whole cultural issue here, and I think that's part of what this is. We have creative people who are by nature, as you describe them, and what we really need for the game to succeed is somebody who's very good at exploitation. And publishers are successful because they're really good at exploiting, period.
Right.
And then you have to, so the idea is to find, I agree with you 100%, surround yourself with a group of very competent professionals, if you can afford it, which is a whole different thing. And also find publishers who are wise enough to understand that they need to be able to, that they should be exploiting your game but not you. And I think that's one of the issues that I have. That I most often, I like to tell my clients that I'm building their spines one vertebrae at a time, you know, and trying to get them a little tougher. But it is hard. I got a couple questions just that came up in my head.
Sure.
Do you ever have, and this is, I'm going to just forget the fact that it costs money and just say, do you ever get in situations where you have an ongoing relationship with a developer where basically you're receiving copies of the royalty statements, you're basically monitoring the contract on an ongoing basis, rather than just being called in to put out to check and see whether they gotten burned? Yeah.
I have clients that after I've gone in to do an audit, started sending me their statements periodically to take a look.
Mm-hmm.
But again, to just borrow from the music industry, in the music industry, there's somebody whose job it is to do stuff like that, and that person is a business manager, it's an accountant. And so, I mean, I think in a developer, if you have a CFO, either your CFO should be doing that, or if they're not capable, which not every CFO is, they have a lot of other stuff to worry about, then yeah, I think it makes sense for them to reach out to someone like me periodically. And not only can we take a look at the statements, but we can also track your right to object to the statement so that you don't lose any audit rights.
Yeah. Well, I see that all the time. I've been noticing lately where you get an audit provision that says you can only audit 1 year and you can only audit once a year, and they have 60 days to respond to a request for an audit, which means basically you can't really effectively audit the contract because by the time you notify them, you're losing months off of your ability to audit. I always press very hard against those.
Right.
But it's sort of like especially in an industry where a developer does, even a developer that's successful in doing contracts and even can handle multiple projects. If a developer sees 2 contracts a year, it's extraordinary, right? And these publishers see anywhere from 10 to 100 a year.
Exactly.
And so they're getting real good at getting down there in the weeds with these things and finding every which way to get a tactical advantage in the negotiation because they are, for lack of a better term, they're Ferengi. They're using the Ferengi mindset, and,
right.
and the developers are all these idealist guys. It may be a little oversimplification. Obviously, there's some developers that have very competent business people with them, but it's certainly not the norm.
Well,
another question that's kind of relevant on this, and for you is, and I'll be frank with you, I've never had a client do an audit. Shame on me, I know, but they just haven't. Mostly because most of my people are self-publishing at this point. But what happens after the audit? Because one of the things that I see in audit provisions that always bothers me is it doesn't say, a lot of them are kind of silent. So you get to have an audit, right? And then if they agree with it, they have to pay you. But I'm certain that they don't always agree with it. So let's
right.
talk a little bit about the whole, okay, you do an audit and you find that there's a little bucket of money that they didn't pay or that you think they didn't pay. And now what is the process that happens at that point?
Yeah, so I think if you were to look at the contracts that you may have signed with your publisher and read the audit provisions, the way you would think an audit works is that you would hire somebody to go in and do an audit, and it might take a few weeks, and the other side would pay you what you're owed, if anything, and that's how an audit would work. But that's actually not how an audit works. It requires a lot more time than you are led to believe. And actually, I've got some slides that I accidentally just skipped over on like what steps you would actually take to do an audit. And so if you decide you're interested in doing an audit, I mean, I think I did skip over some slides, which the first step is figure out whether it even makes sense to do an audit. We help clients do that. If it makes sense to do some level of auditing, then you need to engage an auditor. The auditor needs to complete the audit, and we'll talk about that. And then the audit needs to be resolved, and those are whole swaths of time that occur. And so how you would engage an auditor is you want to after you provide an auditor or potential auditors with your statements and your agreements, you want to get proposals from them so you can understand what it is that they're proposing to audit. Because the best way for you to control audit costs is to limit the scope of the audit, actually. And somebody had asked about fee structure here. I think they were asking about how much it costs.
David Ham was asking, this is a great idea. What's it going to cost me?
Right. So let me address that as I go through these slides. So most auditors, myself included, work on an hourly basis, and we have different levels of staff people at different rates. And so how much an audit costs is a function of how much time different people are spending at different rates. And so as part of our proposal, we will estimate our fees for that. We don't
normally would you actually like review the audit provisions in the agreement that you'd have to be dealing with in order to help determine, and do you charge for that, for the preparation of the proposal, or is that part of the business?
No, we don't. And actually, a lot of the time when we're called about a potential audit, a lot of the time we turn the person away. I almost think 9 times out of 10 we turn them away. So what we do to figure that out is we ask for a copy of the complete agreement, not just the audit provisions, and we also ask for the accountings that we think would be at issue for the audit period, and we assess whether we think an audit makes sense. If we think an audit makes sense, then we make a recommendation in the form of a proposal. So we do all of that free of charge. In our proposal, we usually have a fee estimate, and then if the client is agreeable to that, or if we decide to do something different than we proposed, then we'll enter into an engagement agreement. From the point at which the client signs the engagement agreement, then we're hired and then we are charging for our time. But we actually spend a lot of time up front free of charge to help identify the issues and decide, what we recommend. But getting back to fees really quickly, so we don't charge flat fees because I think audits are too unpredictable in this space to know exactly what it would be. And we also don't take on engagements on a contingency basis for a number of reasons, although I have in the past.
They're virtually prohibited in every contract I've ever seen.
Yeah, and also if your matter were to go to litigation, so I couldn't be an expert witness if I had a financial stake in the outcome of the case. And so I don't like that to be an issue. And it actually introduces some conflicts of interest if we're working on a contingency basis, because I think it's really important, especially to developers, to preserve their relationship with publishers. And some developers don't want us to find every nickel and dime. Sometimes they really want to know some information, like how much profit is the publisher really making off of this localization, because it took me a lot of time to do this. And if they're not making any money, I don't want to do it on the next game. And so there's a lot of reasons why a developer might be interested in doing an audit, or they might want to find breaches of contract. But if my only incentive is to find a lot of money, that can sometimes be a conflict. So I don't even recommend that. And for another reason too, the types of auditors who are willing to work on a contingency basis are usually really small shops, and they have cash flow issues. And so what's going to happen is your audit will be on the bottom of the stack. They will be working on their hourly engagements before they work on your audit. So you want to get a lot of attention from your auditor, and so I don't actually recommend that fee structure. But anyway, so moving on from how to engage an auditor, what you can expect in the first phase of an audit is a lot of paperwork. I mean, we can't just go in and do an audit. Usually there have to be audit and objection notices sent. We have to negotiate an NDA. A lot of times we send a questionnaire to the other side and get information that we use to prepare a document request. Then after we send the document request, we schedule field work. And when we do go either out in the field for field work, we do remote field work, the information isn't all there. We usually have to follow up a lot of times, and it takes months to do analysis sometimes. And then we prepare a report. And in the meantime, we may need to work with your attorney to enter into a tolling agreement to toll the contractual and statutory limitations on your right to object to the statement. And so there's a lot of paperwork and time involved. It's not that we can just drop in and the audit consists of field work during 1 week of time or something. Unfortunately, it takes a long time. And then once we do all of that, and after we share our findings with the developer, with you guys, and you guys decide you want to share the report with the other side, with the publisher or the distributor, we send it to them, but then we have to wait a long time for their response to that report. And when we get the response, a lot of the time, the response is, we looked at it, we don't owe you any money. And so then there's a whole back and forth about the issues with the attorneys, and usually that results in a negotiation and a settlement. Sometimes when the parties can't agree, excuse me, it results in litigation. Pardon me. So do we have other questions?
No, that was a good one. I don't know. Anybody got a question out there? I don't have any questions. Are you going to be okay? You need a water?
I'm good. I have a frog in my throat, but I'll be fine.
Well, you've been talking for an hour. I suspect you would. Well, look at. I don't know about everyone else, but I think this has been excellent, Cedar. This is very useful, and as everyone knows, or as you probably do know, this is going to be published on our YouTube channel, and will become an ongoing resource for our members and others in the industry. So I can't thank you enough. This has been wonderful. Wait a second. Chris Crowell says, this has been very helpful. I hope I don't need it. So thank you very much.
Thank you.
With that, I guess we're going to close out for this month. Next month, I will come up with something else really good for us. Anyway, thanks again, Cedar. Oh, she's gone. Oh, she's back.
It was a pleasure.
All right. Thanks a lot. This has been great.